Hello, everyone. Welcome and thank you for joining our webinar series. My name is Rose Boulay and I oversee the Office of Parent Services, also known as OPS. The topic of discussion today is financing your students' college education. With me today is Kel Miata, Assistant Director of Financial Services and Customer Relations within Financial Aid Services and University and undergraduate admissions. Kel will talk about some FAFSA changes for the upcoming year, student loans and what happens after graduation when it's time to pay that loan, financing education abroad and summer sessions, scholarships, student employment, and resources available within the university and elsewhere to help students finance their college education. A question and answer session will follow after the presentation, so we kindly ask that you leave your questions until the end. We'll use the chat feature to share important links with you, while you use the Q&A feature to submit questions. This presentation is being recorded, and a copy will be available within a few days on the Office of Parent Services YouTube channel for future use. Without any further ado, please welcome Kel Miata.
Hello, everybody. My name is Kel Miata. I'm the Assistant Director of Financial Aid Services, and today I will be talking about all things financial aid. So in terms of what I'm going to talk about today, we're going to talk about what financial aid services can do for you. We're going to go over the FAFSA and maybe some things to keep in mind in regards to it. And then we can cover student loans. We'll talk a little bit about studying abroad. So let's say that you're planning to go to Australia for a semester or so. We can talk a little bit about how the aid works around that. And then we can cover summer financial aid, how that works. And then we'll go over student employment and wrap up with scholarships. So in terms of our office, we can do any kind of walk-in counseling. So if you come to our office Monday through Friday, we're able to answer any questions that you might have. These questions might be pertaining to the FAFSA, or if you get flagged for verification and you're not sure about which documents that need to be submitted, we can help you with that process. And obviously questions about loans, scholarships, and grants and things like that, we're able to assist. My personal favorite is any kind of financial wellness counseling. So if you have any questions about how the interest accumulates on loans, how to minimize debt and things like that, we're more than happy to assist as well. So the FAFSA, I think the most important thing to keep in mind is that the deadline is going to be on March 1st. So it's right around the corner. So I'm glad we're having this presentation today. Every year the FAFSA becomes available on October 1st, but you want to make sure that you get the FAFSA in by March 1st. So that deadline is coming up right around the corner. Something to keep in mind with the FAFSA for the 2022 to 2023 academic year is for families that have received unemployment in 2020, but filed taxes after the March 11th timeline. If your expected family contribution number is lower on the FAFSA, but if it's above 0, we do recommend that you talk to us just in case it's worth doing a special circumstance appeal. The reason for this is because the unemployment income, due to federal rules and changes that happened, it's going to inflate your AGI value on your taxes. So when we pull the financial information from the FAFSA, it's going to initially appear a little bit higher than what it might be after they made the changes. So it does get really complicated pretty quickly. So it's something that we would love to talk to you about if this is a circumstance that you think you fit into and you have an EFC above 0. We're more than happy to take questions about this, and we can open up all the financials and discuss in more detail. The key thing is that we're here to help. So if you're going through the FAFSA and you're stuck on question number 26 or something like that, you can go ahead and reach out to us. You can give us a call, or you can arrange an appointment with a counselor on Zoom, and then we can go over it step by step. What I've been doing pretty frequently in this duration is to meet on Zoom, but then have the family share screen on Zoom. So then I'm able to see the step by step. So then I can help you through that process. Student loans. So some things to keep in mind is that the federal extension is now going to May 1st. So when COVID happened, the government said, look, we're going to pretty much leave everything at 0% as long as it's a federal loan. And this kept getting extended over and over again. And now the final extension is May 1st. So we're hoping that they keep extending it, but we're not sure exactly what's going to happen. So just keep in mind that if you have a federal unsubsidized loan, for example, or a graduate plus loan or a parent plus loan, the interest is going to start accruing after this May 1st timeline. There is, of course, the possibility that the government comes out and says, we're going to extend it into September. That would be great news. I'd be very happy personally. So in that circumstance, you don't have to worry about the interest accruing, but it's something to keep in mind in terms of tackling that loan debt. The other thing is that if you plan to continue deferment for the student loans, you are required to be enrolled in at least 6 credits. So just to do an example, let's say that in fall of 2022, instead of the student being a full-time student or a half-time student, the student only takes 1 course. So let's say that they're in 3 credits. In that circumstance, they fall below that 6 credit threshold. So then they're going to come out of deferment and they're going to start, they're going to be required to start making payments for the student loans. So this is something very important to keep in mind. And if you have private loans, same things are probably going to apply as well. Every private lender is a little bit different, but this is something that you should definitely keep in mind when it comes to the student loans, if you have taken out any. A common thing that gets asked is that, can you make payments while you're in school? And the answer to that is absolutely. So we actually encourage students to make payments on their loans if they have the ability to do so. So for example, in the summertime, if your income increases a little bit and you have, let's say, $2,500 so far that you've taken out in federal loans, we encourage you to go ahead and pay that down so that by the time you graduate, you have less debt in the future. Another question that comes up is, do student loans go on your credit report? Absolutely. So if a student takes out either a subsidized or unsubsidized loan, that is going to go on the student's credit report. And in many cases, because a student might not necessarily have, let's say, a credit card or other forms of debt on their credit report, this is going to be the primary information that shows up on their credit report. So what happens sometimes after the student graduates is they go ahead and completely pay off that student loan. And what can happen is your credit score can suddenly drop by, maybe more than 10 points or maybe 20 points or maybe even further. And this is primarily because it was the primary item that was listed on your credit report. So what I tend to recommend is if you know that you're going to be going for a mortgage very soon, right? Or if you know that you're going to be going for a car loan and you need a strong credit score, then go ahead and pay down that student loan as much as possible. You can leave a balance of, like $100 or $500 so that the interest accruing is going to be very minimal. And then once you go ahead and get that mortgage with the highest credit score possible, go ahead and pay off that student loan. So even if your score drops by 40, 50 points, it doesn't really matter, because at that point, you've already secured your mortgage, you've already secured your auto loan, and then at that point, your credit score can just recover over time as well. Study abroad. So some things to keep in mind, let's say that you're going to Italy for a semester, maybe fall of 2022. There's going to be a $910 IPO fee. The IPO is the International Programs Office. So they would be the first point of contact as you get this process started. And in terms of how the financial aid works, most aid will be able to transfer overseas. However, there are some items that will not be able to transfer. One of those being the John and Abigail Adams tuition credit, another being a COPLIC award. So if you're an in-state student that has those awards, please keep in mind that you won't be able to transfer those to overseas. Everything else you're going to be able to have it getting applied. So if you have loans, if you have grants, for example, if you have any kind of need-based aid, those types of awards will be able to get applied. So that's something to keep in mind. Please make sure that you complete the IPO paperwork in a timely manner, because if you and the IPO office is really good about this. So they make sure that you get it done early enough. But if you do your IPO paperwork last minute, it can become a very stressful environment because you're about to leave the country, right? And there might be visa paperwork that you have to go through. There's a lot of variables to keep in mind. So you want to make sure that you get all your IPO paperwork in a timely fashion. And students, it's crucial that they add a parent or guardian onto FERPA if they are a dependent student. So the reason that we recommend this is because without FERPA access, we cannot communicate with the parent directly. So let's say that the student is in Italy with a completely different time zone, and there's some type of issue that needs to be resolved as soon as possible. They might communicate to the parent directly, but when the parent communicates with us, if they're not on FERPA, we can't disclose any kind of information. So that can be a very difficult situation. So in terms of adding a parent onto FERPA, it's very easy. The student can go into their Spire account and add them on there. We also have educational videos that have been posted on YouTube. So you're going to be able to pull that up, and the student's going to be able to easily add parents onto FERPA so that this won't be an issue. Summer financial aid. So summer financial aid, I think the first and most important thing to know is that there's a summer aid application. This gets posted on our website under the forms section. It's not available yet, but we're expecting it to get posted at about March or April or so. So if you know that you're going to be enrolled for the summer, you want to make sure that you complete the summer financial aid application. Please keep in mind that for the summer, the aid is primarily loans. So if a student receives a lot of need-based aid in the fall and spring, they're not necessarily going to see that exact same financial aid package because it's going to be mostly loans. So this is something very important to keep in mind. The other thing is that you need to be enrolled in at least 6 credits. So if you fall below 6 credits, that just means that you're going to have to pay out of pocket. And if you're 6 credits or more, you're going to be able to use your federal loans that you have access to. The other thing is to keep in mind where your student loan aggregate is. So your student loan aggregate is pretty much the maximum amount of money that you can take out for your student loans. As an undergraduate dependent student, your maximum is $31,000. So in most cases, students can take out student loans from freshman year through senior year without any issue. However, this can become a problem if a student is, let's say, continuously enrolled for the summer and takes out student loans continuously, or maybe they, let's say, drop courses after add drop period and the aid stays as it is. That's another different way that you could end up using up a lot of your student loans. So just keep in mind that there's this thing that exists. It's called an aggregate for undergraduate students, and that number is $31,000. So you want to make sure that if you're really close to that limit, you want to be a little bit cautious about enrolling in the summer. If you do enroll, you just want to be wary of what could happen down the line in terms of accessing the federal loans. Searching for scholarships. So when you're looking for scholarships, we usually recommend starting at the micro level and gradually expanding to the macro. So start at a smaller pool and gradually expand to a bigger one. So this means talking to any organizations that you might be affiliated with, any local nonprofit organizations. For some reason, we see a lot of scholarships from like local grocery stores. So make sure that you reach out to those types of organizations so that you can maximize scholarships on your account. The reason that we recommend a smaller pool as opposed to a bigger one is because it's less competition, your probability improves. So if you're looking at a scholarship that's for $250,000, but it's a national scholarship, you're going to be competing with many other students that have 4.0 GPAs, which makes it a little bit more difficult. So that's something that you want to keep in mind when you're applying for scholarships. You want to make sure that you utilize your local resources first. Speaking of your local resources, UMass Amherst has a lot of scholarships. So there's about 500, and I've seen it go up to about 700 scholarships throughout the year. and everything gets posted on UMass Academic Work. So that's the link on the second line on the right side right here. So UMass Academic Works is a page that a student can access, and they can create an application on there. The benefit is it does the filtering for the student, and it prompts the student. It says, hey, I think this, scholarship is worth applying to. You should probably complete this essay. It doesn't talk to you like that, but that's the idea behind it. So instead of you having to open up the entire scholarship page and going through the 500 scholarships each, individually, it cuts down on a lot of the legwork. So it simplifies that process. Student employment. So there's work study and non-work study employment. So some of you might have noticed at this point that work study is in fact need-based. So when you submit the FAFSA, it looks at your financial information. If you're below a certain threshold, you might qualify for work study. If you're above that threshold, you may not qualify for work study. There are pros and cons with work study. So the pros with work study is that on-campus jobs might be a little bit easier to secure. However, there is a limit in terms of how much money you can earn, so that's something to keep in mind. Work study is about $2,000 for the year, $1,000 per semester. So if you do exceed that amount, or if you hit that limit, you do have to have a conversation with your employer to see if your employer can keep paying you with their department budget, for example, as opposed to using work study funds. This is something to keep in mind if you, as a student, have work study. If you are a non-work study student, then you have the ability to obviously apply for jobs on campus as well as off campus. And the benefit is that once you secure a position, technically your earning potential is unlimited, but you want to make sure that you want to make sure that you balance the workload, because you don't want to be taking 15 credits and at the same time working 30 hours a week. That's a recipe for burnout. So you want to make sure that you keep that good balance as well. Okay, so I think we're going to wrap up with the timeline, and then we're going to dive into questions. So in regards to the timeline, as I mentioned earlier, the FAFSA becomes available every single year on October 1st. That's go time. That's when you can go ahead and go to the federal website and complete it. You want to make sure that you get that in by March 1st, which is right around the corner. So if you haven't gotten the FAFSA, please make sure to do so. And if you have questions in regards to it, you can reach out to us and we're more than happy to help. If you're flagged for verification, that typically happens around February or March or so. And then you might be aware at this point that bills are typically available around July, mid-July or so. And then after that is when your bill is going to be due. So that's the timeline. And I think I'm going to pass it back to you, Rose, and we'll go through some questions that people might have asked.
All right. Thank you so much, Kel, for this awesome presentation. I mean, there are a lot of details for sure that people need to be aware of. Now we'll transition into some questions. We have a few that came in earlier, so we'll go through them first and then look again to see if we have more questions. The first questions we had was in regards to international students. Can they get student loan, whether they are on H4 or F1?
It's a great question. So as an international student, you're not going to be able to access the federal loans. You won't be able to access like a federal unsubsidized loan, for example. And in terms of funding, what we see most frequently in regards to loans is either they secure a loan in their home country, and then they have a wire transfer to cover the bill with the bursar's office, or they have a loan in the United States, but it's with a cosigner that has US citizenship. So those are the two most common paths that we see when it comes to loan funding for international students.
All right, great. Thank you so much. The other one is a change in income. And it reads, my income has changed by $20,000. How do I help my student?
Yeah, absolutely. So we have what's called the special circumstance appeal, and it's listed right on our website under our form section. However, we do recommend that you meet with a financial aid counselor first so that we can go over all the financials to make sure that it's worth doing this appeal. And I'll explain why. So let's say that your adjusted gross income on your taxes are very high. Let's say that the AGI is 400,000, for example. And then there's an income reduction, it goes down to 200,000. Now, as an income reduction, that is significant. However, in terms of the overall threshold, you're still in the six figures range. So even if there was that income reduction, you're still not going to qualify for need-based aid. There's also other variables to consider, like how many students are in college at the same time. What is your investment net worth? What do you have in stocks and bonds? Do you have real estate? Do you have rental properties? These are all these different things that we'll need to take a look at. And then we can make the recommendation yes or no on whether or not you should do the appeal.
All right, great. The next one is about unemployment. You mentioned a tax filing deadline. What was that deadline again? And then also, if somebody had already completed the FAFSA in October 2021, but then their spouse filed for unemployment, had unemployment in 2020, do they need to contact your office to make an adjustment?
Yes. Well, I don't know about the adjustment per se because we want to take a look at the numbers first. But we do recommend that you contact our office so we can take a look at everything to see if it is worth completing an appeal and for us to request certain documents so that we can review. In terms of the specific date on what the IRS came out with, I believe it was March 11th. So for families that filed before that date, their tax wasn't reflected in the FAFSA yet, from what I understand. So I think what I'm going to recommend is go ahead and reach out to us. We're going to take a look at everything, and we can let you know whether or not it is worth proceeding with this appeal. The one thing that I mentioned earlier that's fairly important is that if you already had a zero EFC, a zero expected family contribution number on the FAFSA, you can't really go into a negative EFC number. The zero is the maximum, or I should say the minimum. So that's something to keep in mind as well. So you could always log into your FAFSA to see what the EFC number is. And the opposite is also true. Although it's unlikely in this situation, if your EFC is something like 100,000, then depending on what the reduction is, it might not be worth doing. So reach out to us and we'll go ahead and look into it and we can talk to you about it.
Thank you. And the next one is about students who've already completed their FAFSA form. When can they expect to receive their financial aid awards?
Great question. So for returning students, packaging does happen much, much later compared to the students that are incoming. So for returning students, you can expect a financial aid package around, I would say, mid to late July or so. And if there's any delay, due to COVID or other variables, it would probably be early August.
All right. And and I think this one might be coming from a new student. If they file for FAFSA and then they decide not to attend, what happened? Do they need to make corrections? What do they do?
No, there's nothing that you have to do. So if you're planning on attending UMass Amherst initially, you sent the FAFSA to UMass Amherst, but you change your mind and you're going to a different institution. In regards to the FAFSA, there's nothing that you would have to change there.
Already. And this one is in regard to study abroad. If they understand that they cannot use Abigail Adams to go abroad, does that mean when they come back, their award is back on their award?
Yes, that's a great question. So you can just reach out to our office to let us know that you were studying abroad and now you've returned, you're going to be a full-time student, and you can request for the John and Abigail Adams to be reinstated. And then we'll be able to just put it right back on the account. assuming that the student is meeting satisfactory academic progress. So that's your GPA and number of credits enrolled and things like that.
Great, thank you. And the other one is about common mistakes. What are some of the common mistakes that students do when filing for FAFSA or receiving aid?
Great point. On the FAFSA specifically, families commonly make the mistake of including their primary residence as an investment. Your primary residence is not an investment, so you want to make sure you don't include that on there. If you have two homes and your second house, let's say, is an investment property, you do want to make sure you include that value on there. Other common mistakes, I would say, might be accidentally entering Roth IRAs, right? Or IRAs, any kind of retirement account that isn't supposed to go into the investment net worth section. Please make sure that you don't put that information in there, because it's going to inflate the numbers on there and it could impact your expected family contribution number.
Cool. This one is about, again, student loans, and there are a few components of it. First, can students take a loan without a cosigner? And can they use Parent Plus loans for study abroad?
Great question. So for the students to be able to secure, let's say, a private loan without a cosigner, it is possible, but we don't see it too frequently, because when they're a freshman, sophomore, and junior year, they don't have significant credit history. So unless there was something happening on your credit report, like maybe a parent, opened up, let's say, like a credit card in your name at the time of birth, right, and improved your credit score. So there are some rare circumstances like that where the student might be able to independently apply for a private loan, which we also call an alternative loan. In most cases, it does require a cosigner. We have seen some cases where a senior has a higher success rate when it comes to applying for loans on their own. But some things to keep in mind is that the interest rate isn't that favorable, especially right now with the Federal Reserve projected to raise interest rates. It's probably going to be fairly high from this point. You might be looking at 7% plus. So that's something to keep in mind for loans, especially. In regards to the Parent Plus, yes, you should be able to go ahead and apply that onto the account. And we should be able to send whatever funds over. And there's different ways that funds can get sent overseas, but that's something that we can dive into in more detail if you go ahead and reach out to us.
Great. And can students use loans to cover off-campus expenses, living off-campus?
Yes. There's a lot to dive into here. So let's say that your cost of attendance for the institution is $30,000. That means that you're going to be able to get aid up to that 30,000 mark. So something to keep in mind is that if you're an in-state student, let's assume that your cost of attendance is 30,000, just to simplify the numbers. If you're not getting charged for room and board, you're not going to be getting billed for that. So the billing is going to be a little bit less. So let's say that you're looking at your annual account summary and it's going to be costing you $20,000 in terms of an out-of-pocket cost. But remember, the cost of attendance is $30,000. So that means that you still have the ability to apply for a loan for the maximum up to the cost of attendance. So in this example, you can get aid up to that $30,000. So when you do the 30,000 minus 20,000, you're going to have a difference of 10,000. So then you would get that money back as a refund, and then you would be able to use towards rent and expenses like that. There's different ways that cost of attendances can play out and can get complicated. So feel free to reach out to us and we can pull up the account and take a look at everything.
Yep, definitely. It's a tricky issue right there. And the other one is about the tax form itself. can families use tax form 2020 return, 2021 return instead of 2020 when filing for the FAFSA?
Good question. You are required to submit your 2020 financial information when it comes to the 2022 to 2023 academic year. The FAFSA always requires, well, I shouldn't say always in case they change rules, but it's always the prior year. So if you're 2022, then it's going to be requiring 2020 financial information. Now, the reason you might have brought up that question is it could be because your 2021 financial information might actually be lower. So if that's the case, then for the next academic year, it would be pulling from the 2021 financial information, which could lower the overall financial information.
Oh. This one is for a first year student, a new student that's studying in the fall. If the student has received some scholarships from their high school, when would those scholarships apply to their tuition?
So once you commit to UMass Amherst, and then you go ahead and send the scholarships over, and in terms of the location that the scholarships go to, it's actually the bursar's office, not the financial aid office. So they're going to process those checks, and then you would actually see it getting applied onto the bill closer to when the bill becomes available. So you might be looking at about August or so, I would say. There can be some fluctuations in that timeline, but that would be my best guess right now.
Already. I have one about AGI. What is the AGI to qualify for need-based financial aid?
That's a very good question, and it's a complicated answer because there's other variables that the FAFSA does look at. So there's an investment net worth that gets factored in. There's also the student savings as well as the student's income, how many students are in college. So these variables can really change the expected family contribution number on the FAFSA. So it's hard to say, it's hard to say this is the AGI number. This is the AGI number that you want to be below to qualify for X amount kind of a thing. It's very difficult to do that because there's other variables. Assuming $0 for investment net worth, and let's say like $1,000 for cash savings, one student in college, and other information, let's just say relatively low. So in that circumstance, if I were to guess, and it's a very risky move, so please don't quote me on this, you might be looking at an income of, I'd say like 55,000 and below. But things to keep in mind with that is that even within need-based aid, there's a range, right? So if your expected family contribution is 0, then you're going to be receiving the maximum amount of need-based aid, as opposed to, let's say your expected family contribution is, let's say 5,000. So then there's a different dollar amount that gets distributed when it comes to the need-based aid.
Okay, these are some
Sorry,
very
that's a long
important answers.
Yes, I would, for that, the individual that asked that question, if you'd like us to run simulations, you can request to meet with a counselor like myself. We can pull up the financial information, we can run simulations and let you know, like if you have any questions in regards to it.
Great, thank you. This one is about the Chancellor's Award for this year. Can a student expect it to be the same in subsequent years, or does that vary with the annual FAFSA data?
Great question. You can expect it to be the same. However, please keep in mind that you do have to meet the requirements. So Chancellor's Award requires full-time enrollment. And in regards to GPA, I believe the threshold is 2.0, but you do need to be meeting satisfactory academic progress. So assuming that you meet these requirements, everything's going to stay the same. So if you have let's say an $8,000 Chancellor's Award freshman year, it's going to stay that way up to senior year.
All right, think we have a couple more questions to ask. The loan aggregate amount that was mentioned of 31,000 maximum, is that per year?
Great question. So the 31,000 is the maximum that during your undergraduate career, I should say. So, you know, freshman year, you take out $5,500. That's the maximum that you can access as a dependent student. Sophomore year, you can take out $6,500 if you choose to do so. Junior and senior year, you have the ability to take out $7,500. So when you add these up, you're still going to be below the threshold of 31,000. But what can happen is, if students continue to enroll in the summer and they keep using the loans, they're more likely to hit that aggregate limit. So that's something to keep in mind. But if you're just going through continuous enrollment, freshman through senior year, most cases, you don't really have to worry about the aggregate. And if a student is considering graduate school, your aggregate expands. So if you're going to go to medical school, or if you're getting, you know, master's, PhD, for a master's level, you're going to be able to expand that to about $130,000 for the aggregate, which I'm not sure it's a great thing, but that's how that works. And if you're going to medical school, then the cap actually becomes bigger. So those are some things to keep in mind.
Thank you so much. And this one is, I think this one might also be for a first year student or family member. If they receive a notification from FAFSA that the application was successfully submitted, does that mean that, how do they know that UMass always received it?
When you log into the FAFSA, not the FAFSA, your Spire account, which is a portal that students attending UMass Amherst or that were accepted into UMass Amherst are going to have access to, you're going to be able to see a little box on the right side that says to do. And on there, you're going to probably see 2022-2023 FAFSA initiated if we haven't received it yet. But if we do have it, it's not going to say anything in that box. And another thing that you can do is you can just reach out to us and we can check and make sure that we have the FAFSA on file. But the other thing to keep in mind is that if we received your FAFSA and you're an incoming student, that's how we give you a financial aid package. So if you already have a financial aid package, that means that we already got your FAFSA. So that's something to kind of keep in mind. And coming back to the question from earlier, what are some common mistakes? And I would say the number one or something up there might be forgetting to keep an eye on your Spire to-do list. So students do get emails, but the Spire to-do list box that's on the right side, that's very important, because if there's any items that need to be completed, it's going to pop up right there on the Spire to-do list. So I think if there's one takeaway, that's going to be it. Yeah.
Yep, definitely. That will delay everything if you don't check the to-dos. The other question we have is, it's in regards to families that might have more than one student going to college. Mm-hmm. How does that affect their FAFSA? And is it double in aid, or how does that work for families with multiple students?
Great question. So the FAFSA does take into account how many students are attending college at the same time, and the expected family contribution number does get adjusted appropriately. And let's say that your adjusted gross income is like $100,000, for example, and you went from one student to college to two students in college. It's possible in that example that your EFC number does drop enough to the point where you start qualifying for need-based aid. So the short answer is I can't really give out like too much on the specifics, but if there are multiple students attending college at the same time, it does have an impact on the overall EFC number on the FAFSA. But I can't say that guarantees financial aid, like need-based financial aid, getting dispersed onto the account, because it really does depend on the financials. But If you'd like to go into more detail about it, we can meet with you and go over the numbers.
All right. Going back to the Chancellor's Award, if you receive a certain amount for the Chancellor's Award for your first semester, let's say, and then you receive the Dean List status with a 3.9 GPA, could the award get higher?
That's a good question. I'm not sure if I have the correct answer, but I'm pretty sure that there isn't going to be any change on the Chancellor's Award. I've never seen a circumstance where the Chancellor's Award has increased based on how well a student does academically. It's possible that when the student does very well, they can qualify for other scholarships. However, in terms of the Chancellor's Award, that's not necessarily going to change. So even if you're on the Dean's List, it's not, let's say you have an $8,000 Chancellor's Award, it's not going to go up to, let's say, $12,000, for example.
And the Chancellor's Award is merit-based, correct?
Yes, the Chancellor's Award is merit-based, and it's determined at the time of admission.
Cool. I think these were most of the questions that we received. The other ones look like they are similar in nature. So thank you, Kyle, for this presentation. Sorry, I almost butchered your name.
Okay.
But do you have any last minute word of advice that you want to share with the families at this time?
Yeah, I think the most important thing is to communicate with us when there's anything that you're unsure about and you need clarification. Just go ahead and reach out to us. You can set up an appointment on the website so that you can meet with a counselor on Zoom, or you can set a specific time where you would like a call back, and we'd be more than happy to reach out and talk to you. So please, don't hesitate. We're pretty friendly. We have families, we have pets, so we're normal human beings, not robots. So we're more than happy if you reach out to us.
Thank you so much, Kel. You've shared some really important resources, and we're very grateful for your assistance tonight. Thank you, families, for joining us. We hope this information shared with you was beneficial, and we hope you will join us again on March 9th at 6:30 p.m. for our next webinar on education abroad. If you still have questions, concerns about financial aid, please feel free to reach out to Kel or Financial Aid Services for assistance. They are more than happy to help. Until we see you again, stay healthy and go UMass. Thank you.